Sensex at 60,000 and Nifty is going to be crossing 18,000. And you would have seen all the memes which came in the last week about Sensex becoming a senior citizen, Nifty going to become a teen. So all these things are coming up. More about whether the market can move higher. This is Ganesh Santuru, your stock market profit coach and author of the book One Page Mutual Fund Plan and One Page Stock Market Plan. And today's topic is all about whether Sensex can move higher from this level or will it come down. All these points we will discuss. So the first thing is Sensex becoming 60,000. Nobody thought it will cross, because I did several videos saying that nobody thought Sensex will cross 45,000, 50,000, 55,000, and now it's 60,000. So market has been going up like anything because of global liquidity. Global liquidity, and even in Indian market, if you look at, there is a tremendous liquidity which is driving the market like crazy heights, right? And on equally, if you look at the earnings of the listed companies, it has done exceedingly well. Exceedingly well in the sense they had grown. If you looked at the earnings per share, which is the heartbeat of the company, I'll say, and it has done well. And all these factors says that you should all the market might go even higher. I said the same point when it was around 55,000, because still 50,000 I was skeptical. Will it move higher? All the negativities, everything. But once I started looking at to the earnings of the companies and earnings of the companies of the listed companies, and that to the large cap, it has done dull. It has done exceedingly well. For example, when I explored TTK Prestige Company, it has crossed the earnings that they done business only for 10 months, as per the words of the chairman, and the company has done exceedingly well. The earnings had improved compared to the last previous financial year, and they are expanding. They are expanding. All the companies, all the listed companies, small cap, mid cap, and large cap, particularly companies with good fundamentals, they are expanding. What it says is that the entire market can keep moving higher and higher until there is a bigger negative impact anywhere, even in India or anywhere across the world. But till the time, market might keep moving higher, higher, higher. But I don't know when it will stop. And is it risky? Maybe risky, right? More about that we will see in the coming in the next things. Why I say market will move higher and higher is that just look at the global market, right? There is a global liquidity, and US market is still moving higher, and though it didn't do exceedingly well compared to Indian market, but it has moved higher, 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 right? Even in this financial year, because economic growth happened, unemployment was still there, and it is rising, and inflation is becoming a threatening issue. All these points are there, but still, if you look at the market, it has moved up, right? So considering all these points, and also the market to GDP ratio of US, and in 1946 it was around 105%. Just look at that time we had Second World War, and they entered, they lost the Pearl Harbor, and they also lost huge expenses. And top of it, the market to GDP was around 105%, but it has followed by tremendous growth period. All the companies had seen posted tremendous growth. But in the current scenario, right after Corona crisis, people had lost job, and the inflation is coming up. It looks like coming up. There are many junk companies even in US, where it is getting support from the government, and there are more mortgage loans, and everything is going up, and market to GDP right now is close to 105. Almost after, like, from 46 till now, it's close to 75 years. After a long period of time, it is coming back. The things are coming back, right? So let's see how far the US market can go. And let's consider the Chinese market. Last week we had Evergrande issue. We had done an extensive video. Please go and check it out. In the Evergrande issue, what we had seen is that the $300 billion, that is the debt size of the company, and they're just going to service the interest alone in the last week, and they were able to do it, I think, because it was fully influenced by Chinese government, and they were able to take care of the whole thing. But when it comes to how far they can support and everything, we need to see in the coming months and years. But one thing which was clear, which is coming up, is that people didn't had money. People had deposited in those kind of companies, and the employees were asked to return the money to, so that they can service they can keep the company running. All these issues are fundamental issues are still there, but we don't know the next level of growth, next level of what will happen in these companies. And this is just the biggest real estate company. What might happen to the small companies and all these things, because we are not looking at economy is not just about listed big companies. It's all about small companies. And the market cap of Evergrande has dropped from $41 billion to almost $2.7 billion in this financial year alone. So it says a huge pain point which is there in the real estate growth. And if there is a pain point in the real estate growth, just look at what will happen to the steel, iron, all these kind of companies, which is which started growing because of the demand which was created by the Chinese government last year. And this year automatically it shows a reversal because it was dead. They are building the entire economy on infrastructure and all these things, and all the related sectors, the steel, cement, iron ore, everything started moving up. If that is not there, what will happen to the this particular part of the uh, infrastructure growth, right? This shows a bigger problem in the second economy of the world. So US is also facing a different kind of problem, but they are printing money because US dollar, and they have done it and they're doing it because if it falls, entire world will catch the cold. Because if US sneezes, the entire world will catch the cold, because that is the truth. It happened in 2000, 2008, and 2020, and in 2020 it was common, but in last two three biggest crisis, it was because of the US. Entire global market started falling down. So if this is the impact, just look at number one economy is also having some problem, number two economy is also having some problem. If that is the case, what will happen to the entire world? I mean other countries, which is purely dependent on all these two countries, and rest of the uh, if you look at the top 5, top 10, India is in the top 5 or 7, and along with other European countries, the impending issue is there. The corona issue is still there. We don't know how far it will go off. And let's see, if third wave is not in India, automatically we'll start seeing the growth in India. So right now, looking at all these issues, will it still go up? Because I said about Indian market condition, the global market condition. Again, talking about whether the market can go up from here, it might consolidate. It might consolidate because it happened when it was market was around 49,000 points. It came down to 47,000, I guess, in the month of January. From that time till now, if you look at, the market has been volatile, but in the same range. It didn't bring down by 3-4%. Every time it was coming down by 500,000 points, it has started going up, and it was in the range for 3-4 months and started going up, and now it has touched 60,000 Sensex, I'm saying. So Nifty, when it crosses, might be psychologically, there might be profit booking that we had seen in small cap and mid cap sector. But if the earnings are good in the September month, for sure the growth might still be there. There can be a room for the next level of growth because there are NFOs which is coming up, bigger NFOs, so it can absorb the liquidity which is available in the market. So NFOs like LIC and many companies are lined up, many good companies, and also the company and also the mutual fund NFOs which is coming up. All these will invest in Indian market as well as global market. So liquidity is still driving the market, and we don't know how far. So play the rally, enjoy the growth till that time, right? So when the party is on, you should enjoy. If you're just sitting idle and you can't expect the party tomorrow, right? So enjoy the party, make the money, and then exit, depending upon how far you can take a risk and how far you can enjoy the party, right? Thank you so much for watching. If you have any question with respect to how far the market will grow or whatever it is, please do check out the description and put your comments. I'll be happy to answer your questions. Thank you so much for watching.